Boom. We are alive, ladies and gentlemen. Thank you for joining us today. My flight, well, actually, it was my fault. Missed the flight, sort of, or something, so we're delayed a little bit here. So time for a live stream today. So good news for you guys. We're going to drop in. We're going to take a look at Bitcoin's price and just of the general market. We've been calling for Bitcoin to go to around 40K last week, and the big players have pushed us down that low. Thought maybe there wasn't enough supply, but we're going to take a look at that right now. So on my screen, should be able to see Bitcoin on the 6-hour chart, full of our colorful indicators here. And the area that we are most interested in is this one right here. So notice the VPVR on the right-hand side. This is our volume profile. What it does is it shows us the amount of buying and selling that has taken place within the particular trading range that we are following. Now, it's important to note that there is a massive buy support area here between 30,000 and 39,000. Many large players have started to take positions, and a lot of people are worried, are we going to go lower? Now, obviously there is always the case that we go lower, and I suspect that it would look something like this. We would go back and we wouldn't be able to break back above 43,000, and we'd come back down, come back down to, like, let's say $20,000 or something. Now, this would be a very easy sentiment to make if we were in 2017, when there's just largely no institutional interest. But right now, we've seen some of the world's biggest funds move into this sector, and they are constantly in the background accumulating. Luna and Terra for their reserves is a great example, where what I think you're witnessing is a lot of strategic buys taking place, showing the support that's really building there. And these guys are not really aimed at getting rid of assets effectively, right? So their goal is not to get into a position and then sell it. It's largely just to accumulate only. So one of the things that's important there, increase audio volume, you guys are saying, there we go, it should be better hopefully. It's the downside to traveling is you never know what's going on. So as we move into this area, there's a lot of support and resistance again here, a lot of support right around the point of control, which we've been looking at, which is right around $38,000 to $39,000. So I do suspect that we will see a pretty big supply test today. If we scroll in on the 6-hour and get a little bit more myopic with today's view, again, the point of control is right around $40,000. There's a very high likelihood that we come to test this $38,000 mark. This is acting as a magnet, this point of control, and the big players want to make sure that they've sucked up all of the possible Bitcoin from this particular supply range. So now, one of the things we like to do is also take a look at Glassnode's data. One of the reasons being is we want to know how much new supply there is coming into the market. And if we look at the last month, since basically September, we have only decreased in supply on the open exchanges. So this is ultimately bullish. Again, I think we're seeing a big bullish divergence here between the amount of supply and the current price. This is also the reason why we are so confident that this is actually a lateral reaccumulation range, very similar to what we've witnessed in the past. Now, again, there's room to believe that we could hit $33,000 on this and maybe even dip as low as $31,000 for a supply test here. It really depends on how much supply there is on the side of the markets waiting to get out. Now on the daily, we hit the 200 and 314-day moving average. We turned around almost instantaneously after hitting that. But again, we didn't need to use the moving averages. Again, it is very apparent here on the right-hand side of around 47,000 and on the bottom here on the right-hand side of around 38,000. These are the two key areas that we want to get out of. And again, remember, if we come down here and we do something like this, and for some reason we can't close back above, we could go much lower, and then we would find that this was a distribution trading range instead of a reaccumulation. But I've been here long enough, and the sentiment is so strong, I highly doubt that this is a distribution trading range. I suspect that we see this fill between, again, let's say 37,000 to 41,000, something like this, boom, boom, and then right back to above $50,000 probably pretty quickly. That's my guess. The reason we're making this kind of asserted guess too is based off of other data that we've charted in the past. So one of the ideas I think that's important here is to kind of compare this to the S&P 500. So we're going to grab as much of Bitcoin's data as possible. There we go. And then we're going to double down. We're going to open up two screens here. And Yeah, so on the bottom we have the S&P 500, and on the top we have Bitcoin. So Bitcoin in yellow, S&P 500 in pink. I suspect what we're witnessing is pretty much an identical reaccumulation range to what we saw. Again, you can see here what it looks like from the background. You can even line these spring points up here between Bitcoin and S&P 500 before moving up dramatically, filling a trading range and then going higher. So again, I suspect that what we're witnessing is effectively an analog of the S&P 500, but also of the three peaks and a domed house. So if we go to the internet, we type in 3 peaks and domed house, we can actually see we've looked it up here once or twice already. Actually, 3 peak domed house. Let's see, there's a better one here. Neither of those, okay. Right to the top one, there we go, that's what we wanted. Okay, so you have 3 peaks in a domed house. You can have a domed house and 3 peaks. Either way, these are actually bearish reversal patterns, and I think a lot of people get this wrong. A lot of people were looking at this back in September when we first started to drop, or sorry, December when we first started to drop. But once 20.28 here hits 0.10, which we've effectively already done here, again, 0.10 would bring us as low as 30,000. If we look on the candle wicks, you can see that we actually did hit that area. This is around 0.10, and there's the return of 0.10 effectively. So 0.10 and 0.28 are the end of this pattern to where it becomes a reversal, and you see afterwards probably one of the longest sustained bull markets in Bitcoin in its history. That's my assumption of what's coming next. Again, the big players are going to want to try to push this price down as low as possible to make sure they're scooping up as much cheap Bitcoin before we rally much higher and move into the hundreds and hundreds of thousands of dollars. So I suspect patience here is largely going to pay off. I think everything is looking good so far. It's following right into the path that we were looking for. So I do suspect that same. Okay, now it's too loud. That's funny. Audio is very loud. Yeah, can't get it right. Sorry about that, ladies and gentlemen. On the road, apparently, is just every little thing fucks up. Awesome. Almost every comment was about the audio there. I apologize. Hopefully, you guys have figured it out. Crypto Learner says, I heard you talking about Avalanche sub $20 for once. I didn't pull the trigger. Hope I can get another chance. One of the things we think that's so important about this kind of constant accumulation mentality is that it's like going to the gym. Too many people don't execute because they think they need to make a big investment for it to be worth it. If you think there's something interesting, you should largely make the investment, just make a smaller investment. Whatever the dollar price is that it needs to be for you to execute is actually usually a good thing, whether it's a learning or just a deepening of understanding of the sector. Playing around here and making an investment is almost always a good idea. So if we look at Avalanche, first off, we've been talking about Avalanche. It was around $2 to $3 even before that, before it was went public technically. We were hyper bullish back here in June. We saw an immediate breakout, almost a super fast, almost 10x. That's a little bit higher actually, just under a 10x for us there. And now largely waiting out what I believe to be another reaccumulation range. Bear Den Jerry's charts here I think are also quite beautiful too. So I do suspect this is also a reaccumulation range. There's just too many big players here for us to feel bearish throughout all this. The retail investors are definitely getting scared, but ultimately, whether you invested at $3 or 60 or 30 or 20 or 10, whatever it takes. So buy your first Avalanche. It's a much better way to go to like encourage your own conviction, and that way every month when you show up, if you want to invest in something, you've already kind of made your choice about which investments you'd like to make, and then you can increase or just not make investments based off this new month's feelings. And I think that's a super important way to go. We'll take a look at a few more questions and thoughts here. When Moon Tio is the only person that motivates me in crypto and the gym. Nice. I'm at risk of getting fit and wealthy. Just like a good practice here, showing up on a day-to-day basis really kind of does round out the edges. So what we're going to do now here is just scroll through and take a look at the rest of the market. We've seen a massive spike in the VIX again today. We've just this kind of never-ending fucking fear porn in the market and media. It's the best thing you can do as an investor is probably ignore everything mainstream. Find yourself comfortable somewhere to live where you're not too bathed in that nonsense, and you can remove a lot of the noise, because currently we're operating at a very highly irrational level of fear. Based off where we've been in the past to where we are today, most people are acting severely irrational still on a day-to-day basis. So again, we see reason for that. There's crazy lockdowns around the world which just effectively make no sense. So there's reason for people to be scared, but the irrationality makes that fear go even deeper, and then they continue to do stupider and stupider things. We seem to compound our stupidity when fear shows up. So the fact that we're in this overly heightened range of fear, areas that were effectively equivalent to some of our previous crisis, is a pretty big deal. So keep that in mind, that the average person is actually operating out of a fair amount of irrationality at the moment. The next thing we want to do is actually go down and take a look at the S&P 500. Boom, here we see the pandemic start. This was the best time to enter pretty much every single position. And this is a highlight of when people are dying in the streets, you should be accumulating. This is not a metaphor. This is a literal translation. If you see people falling over dead, if Russia's attacking Ukraine, these are usually moments to buy and kind of ignore that, whatever is going on, if you can. I mean, if you happen to be somewhere where that geopolitical nonsense is at your back door, not really great at operating. But again, this is one of the important parts about Bitcoin, is that at least Bitcoin, if you happen to be Ukrainian or a Russian, either side of this conflict, who's been put out of place through these government regulations and tyranny effectively, then you can leave with your assets. Bitcoin is a mobile digital asset that only needs 24 words that you can remember, and you can walk across borders with all of your assets. Sadly, most people, as they end up in conflict-ridden areas, they have to leave everything behind: businesses, homes, their community, and most of their wealth, which is largely held in the fiat currency of the governments that they sit under. So Bitcoin is a crisis asset. I don't think a lot of people have figured that out yet. So even if we do see crazy volatility in the future and Bitcoin does go down to 20 grand, it will be extraordinarily short-lived, because we're witnessing the collapse of society and governments effectively. We're in the thick of it. You cannot continue to print fiat money forever and expect to get away with it. We have thousands of years of data, and the same thing always happens. It collapses, the society gets degraded, the governments and the economic social contract is basically totally corroded through these corrupt processes. And then, we see a total degradation of the dollar or the currency, and a massive inflation of assets, which is still the only underlying thing that might maintain any value within inside of that stability. So if we look at some of our indicators here, though, we can see that there's room to believe there's a long ways down to go, effectively, right? We could drop another 20% on the S&P 500. They want to tighten. There's no one really to buy the other side of the trade. The Federal Reserve has just taken out hundreds of billions of dollars per day in buying mortgage-backed securities and treasuries. So there's no reason to think that what they're going to do, whether it's tapering and selling those assets or even continue to buy them, is going to do anything different than what has happened in the past, which is inevitably destroy their currency. And you're going to likely see the introduction of central bank digital currencies, because they're going to go, oh, it's Russia's fault, or it's all you people who are doing transactions over $1,000 who we've never tracked before. It's your fault that the society is collapsing, all that hidden dollars. So they're going to try to blame the people like they have always done during the degradation of and try to regulate how you can use your currency. Like they'll be like, oh, you can only use your currency within the 200 kilometers of your home. So a lot of this stuff is going to come down to the complete degradation of the social contract effectively. And again, remembering that Bitcoin is a crisis asset is one of the most important things to understand. When Bitcoin went from $90 to $1,000 the first time, for me it was, and for everyone else who was buying it, was largely because the Cyprus banks were taking anyone who had over $100,000 in their banks and just taking all of your money. They can't do that with Bitcoin. They can't do that with NFTs even. So this is a much better way to maintain ownership of your property. Again, Bitcoin just seems to be the best sovereign money, but again, we're seeing sovereign identity potentially and sovereign governance start to show up within these conversations. And I think that those things are extraordinarily undervalued. And although I do think Bitcoin is our new money, people that are ragging on things like, oh, NFTs are just JPEGs, they have no fucking clue what they are talking about, and they are sheerly stupid. I was not a big proponent of the NFT sector early on, but I've got a big smack in the face in understanding, well, hey, identity is valuable. Even if it's group identity, it doesn't need to be like, oh, your government identity. I mean, for thousands of years, how we dress ourselves, how we relate to our community, this kind of social identity is extraordinarily valuable. Yes, it's been turned into your credit score effectively, but how the community views you, your reputation, and your profile, we'll say, is extraordinarily valuable, if not more valuable than money. Because money is, on the long term, you need a few things to work together. You need sovereign ownership of governance, sovereign ownership of identity, and sovereign ownership of money. Those three things together are like the perfect holy trinity of sovereign ownership of self and self's asset, which you currently do not actually have access to. Okay, so we'll go through here. I did want to again look at the potential here on the long term of why we're so bullish. Ultimately here, let's go out. We'll put this back in area chart so it's a little clearer. Okay, so I suspect again that what we're witnessing is identical to the S&P 500 back between 1994 and 2008, effectively at the end of the financial collapse, where we saw what appeared to be a double top, and most people were super bearish. Most people were super bearish in 2016 too. I remember arguing against the majority of my well thought out multi-billion-dollar peers who were like, oh, we're way too high, we're overvalued. It's like, yeah, we are, but the assets are undervalued compared to the overvaluation of the dollar. And I think a lot of people got that wrong. Now, so the question is, are assets overvalued or is the dollar overvalued? So let's go ahead and take a look at the DXY, which is the dollar index. This is a measurement of the dollar. Again, we could see a reason to believe that we are actually somewhat bullish on the dollar. If they do start to taper, they start to sell the mortgage-backed securities, dollars start to kind of flood back or flood out of the market for a minute, you could see us peak into this new area again, which would be a subsequently negative for Bitcoin. But I just don't think there's enough supply for the Bitcoin price to go too low for too long when there are this many large interests that understand the macro thesis here, which is, hey guys, governments have done this same thing for thousands of years. Nothing's going to change. Humans are pretty much exactly the same. So let's bet on that instead of all of a sudden miraculously the government's being able to save face from the problem that they've had for many, many generations longer than I've been alive. But again, there is reason to believe that this is a reaccumulation pattern on the DXY as well, which would bode poorly for most of the financial asset ecosystem. But for how long? I think a lot of people will lose faith. If it's one currency at a time, that might be what they have to go through. But at this point, the US dollar is the cleanest, dirtiest shirt in the basket, and it's very likely that people will run to that. We were chatting with a good friend of ours in Sri Lanka, and he said that he couldn't get any US dollars by trading the Sri Lankan rupee. And this is what happens when you start to have a currency crisis, an energy crisis, food crisis, famine around the world. The dollars start to, basically all of your indicators and gauges start to go haywire. And we've already seen that over the last few months. Again, they like to blame it on the Russian conflict with Ukraine, but it's totally separate. They're in no way connected. I mean, just for shits and giggles, look at Moderna, this stupid shitcoin here, who has retraced already 70 to 80% of its gains. So the whole market is in a pretty precarious position. I suspect Moderna will basically come back down to zero. I suspect Pfizer will probably come pretty close to zero here too over the next few months to years. But more importantly, look at the nickel index. We saw nickel shoot up. We saw almost a 10x. It's gone down to some type of normalcy. Wheat is up almost 100% as well. Let's see, 64% on wheat. And again, the thing we have to remember is that the majority of the world's population can't afford food or gas. And this usually leads to, the corruption and the corrosion of the social contract layer and the degradation of the currency, because people start to lose all trust in what their government is supposed to be good at or doing, which is generally protecting them from all of the boogeymans that they think that they are vulnerable to. So across the table, you've seen massive spikes in energy, electricity, grains. Here's the grain index and agricultural index. Since March 2020, the agricultural index has shot up 100%. this is very hard on the majority of the world's poorest, and that is actually the majority of the world. So it's when those people become unhappy, our social economy and our contract starts to slip away. I will go through a few more. I want to take a look and see if there's any questions, make sure everything's going smoothly, see if my volume is okay. How about when you fall in love with the project, do you sell any, like Harmony one? That's kind of a fun question. So if you fall in love with the project, do you sell any or at all? This is a good question. It probably depends on how much risk you have on the table. If you're okay walking away, the future we don't know what the future holds. So there are some trades where if I had walked away, they would have, had I just been patient rather, the outcome was exponential. And this happens quite often, and usually just before you sell, just after you sell, the market will shoot up and recoil. It's almost like you were the weakest link, and this happens all the time. It's because the market has become unanimously good at doing one thing, which is taking advantage of irrational people when they're scared about money. It's done this for hundreds and if not thousands of years through speculation, and it's gotten real goddamn good at it. So effectively accumulating and just not making more investments would be, in my opinion, the best way to go, and not effectively selling anything, because you don't know if the market validates your thesis a year from now and the $1,000 you had in there turns into 250 grand. On the downside, you lose the $1,000, but the upside is really what we're aiming at. We know that the upside of getting these right is in the 100 to 200 to 300x. We've seen this multiple times. Open global decentralized venture capital in the first of its kind should not be slept on. Again, the minimum risk, I think, is probably the better way to go, is that you should only be risking what you're willing to lose. So that should be, I think, the core driver of your thesis. And that way you're like, okay, well, I'm okay with losing that $1,000. I'm not going to try to take it out and put it into something else because I had a conviction there. I believed in that theme to begin with. Let's wait and see if I'm right, and let the market validate you or not. It might take a few years, and then it still might not validate you, but you only had so much risk on the table. I think this is the best way to measure this. Did you hear about how they locked the nickel exchange and they refunded $3.5 billion in trades to save nickel? Yeah, I did not hear that, but it definitely looks like when things start to go wrong, the old system is not capable of keeping up with I guess the charts and the madness that starts to take place. So they'll try to cover background, like a lot of that. I think at one point I read that nickel was as high as $100,000 because it just, when you start to hit these spot trades, which are not relative to the fundamental underlying asset itself, you can see these massive discrepancies in price there. So that would make sense. Tio, everyone's saying hi, I love that. Rich says, look at the 75 moving averages. Okay, we'll do that here in a minute. Good morning, brother. Thank you for providing insight in the markets. They're always great to learn with you. My pleasure. What's the name of the book you always recommend? Oh, there's a few. Dan Dow, Dhandho is one of my favorites. 100 Baggers is really good. The Power Law I just read recently is fantastic. Reminiscence of a Stock Operator is another great book. There's so many. I'm really going to have to put together a book list here. But ultimately, when we start to see charts do this on all the core commodities that consumers in the world's majority of the financial situation start to not be able to afford food or gas, we're going to get into very dangerous situations very quickly. So make sure you're at least in a position where you cannot get wiped out and that your assets are safe and secure. That's really all you should be focusing on, because when push comes to shove, we're going to see things that just don't even make sense. The price is going to, like, who remembers when oil went to negative $100 something in the beginning of the pandemic? We're going to see stuff like that constantly over the next few years, where we're hitting circuit breakers and gauges are doing things that they're not supposed to be doing, like going backwards or going over in price by orders of magnitude. So I suspect we will see a lot more of that in the future to come. So again, ultimately bullish on the 3-day here. We do have the 200 moving average, which it looks like we're about to touch it around that 38 to 39. And again, this is where we've been looking for the last week to return to. Pretty much since we started that upside, we were looking to fill this very noticeable gap on the 6 hour here. between the VPVR, and there's multiple aligning reasons to believe that. Again, we've got the main point of control here at exactly $38,700. You've got your 314 moving averages on the 6 hour. Got a massive amount of support coming out from the PSY here, or your primary support phase between, again, 30,000 and 41,000. So we're going to touch here. If we're lucky, we'll spend a few days here. If we don't close above it, okay, well then we're going to go down. But I suspect we're going to see something like this. We're going to be back above $50,000 to $60,000 probably by the end of May, June. Maybe even sooner. It could be even sooner. It really depends. A lot of people are like, oh, look, Luna and MicroStrategy are buying hundreds of millions of dollars a day and the price is still coming down. Yeah, this is actually on purpose. These people who are buying large amounts are buying it on a daily basis to average the price, because we know that there are sellers out there still. Clearly, there are sellers out there, but not many at all. And when we go to look again at the amount of supply that we've gone down, the last week has pretty much just been down, down, down. So I suspect we will continue that. Okay, last thoughts and questions for today. Thanks for being here, Tio. Keep being a rock star. Thanks, Rex. I appreciate that. I will put together a book list. I will do that. What indicators do you use? Are they open source or invite only? Some of them are free. You can go to Arcane Bear under TradingView, and we have a few of them that we give away for free. So if you are already on TradingView, tradingview.com, if you go check out Arcane Bear, let's go to our profile settings. Yeah, if you check out Arcane Bear under scripts, we do have a few that we give away for free. The Eagle's Nest and the Bear Claw and the Eagle Crossing are some of the variations that you see here. Primarily though, you're probably looking at this. CryptoVac was one of the ones we were using here as well. Preferably I go with no indicators. I think it's stronger to build a thesis with nothing from indicators other than price and volume. Too many indicators can just create more noise, and then you have no real line of confidence. I'm very confident here without any of the other indicators. Those are just to like go back and check, like, okay, what's the RSI doing? Great, the RSI is basically reset. You know, we're back below here again. The RSI is basically back below 30, so we're starting to reset the RSI, which is great. Another bullish indicator. Here's another one. Again, massive amount of distribution that was overcome by buying here largely as well. So a lot of strong indicators that say we are bullish, but fundamentally you could take all of those away from me, and this horizontal trading range, the primary support, and then our volume profile and our volume here with our declining sale pressure here is really, really important. Declining sale pressure, rising price. Again, we're seeing bullish divergence almost across the charts. And maybe if we even go to the 3-day, let's take a look at the 3-day RSI here. Yeah, even on the 3-day RSI, you're starting to see a little bit of divergence. We will know better today if we're getting a clear divergence. If the price comes back down to match 38, 37,000, yet stays up here on the daily, I think will be quite strong. But it'd be nice to see even a reset on the daily. So nothing to think we can't go down to 38 to 36,000 on a wick here before turning around. So just make sure you're in a position that's capable of withstanding the wind of volatility, and everything should be gold. Oh yeah, here we go, sorry. Yeah, just make sure you're capable of withstanding the wind of volatility. Everything should be gold. So I don't usually, again, use scripts, but if you go to tradingview.com, go to scripts, you can download the Eagle's Nest, the Bear Claw, the Eagle Crossing. But I like to start here, and then again, check things like, okay, again, you know, here's the RSI on the daily coming down, but on the 6 hour, we've already hit zero, which is good. So we've zeroed out on the 6 hour. I think that's positive. I guess I wasn't showing my screen yet again. I'm freaking awesome at this. Okay, we're gonna leave it at that. Just a quick little update for today. Thank you all for joining us. We've got some really fun stuff coming up this week. Check out DeFi Disrupt if you haven't. Miria and Nyan Heroes, they're all top of the list of our research over the next little while. So that will be fun to keep an eye on those. And then yeah, hopefully tomorrow we'll do the same live stream. I'll have all the volume figured out prior. But thanks for joining through all the ups and downs of these market cycles and my technical difficulties of just streaming clearly. So I appreciate that. We'll drop it again soon, and I'll see you guys on the next episode. Bam.